So this just got exciting. In this video, I am going to show you that we have ended this 40-year cycle, and it is time to get out. Now, you've been saying, well, actually, I've been saying, get out, sell everything and run. Even leave your shoes. Leave the shoes, leave the kids. Don't leave the wife, because she needs to make sure she's holding the camera steady. It's not that funny. But I'm going to show you that we have these market cycles. 40-year, we're looking at the S&P 500, the Dow, going back to the Great Depression. We're also looking at individual stocks, like you have Disney, or you have Tesla. Now, I know a lot of not a lot. There is a YouTuber, acquaintance friend of mine, that I think he was all in on Tesla, probably lost millions, maybe even $10 million by buying and holding. So are you guys still holding? Are you still waiting for that market to rip? Do we have a little bit of a recency bias? But going back into the charts, going back to what is going on today. Also, another thing, for those of you guys that asked the question, why are all these help wanted signs still up? Well, that is because people can still live on the dole. People are making six-figure income by not even working. And you're like, I thought that was over. That is not over. Also, I have a question for you. I'm staying in this hotel room and I have no idea what this thing is. Okay, now I know a bidet. This thing does not move into your Wahoo. What? Am I supposed to like clean my shoes off with this thing? Enough of the toilet jokes. We're gonna look at how the rich get richer, the poor get poorer, and this is with, I don't care, whatever, whoever, I mean, you could, any kind of civilizations, this is how it always works out. The rich get rich, the poor get poor, but let's dive into my computer before I actually run into it. I know I said I was gonna dive into my computer, but does this statue, or whatever this is, look like from Peanuts, that dog guy? And why can I remember Peanuts, or that other word, but I can't remember the dog's name? Snoopy. Okay, I got it. Snoopy. But we are not here for Snoopy. We are here for S&P 500 facing a historical warning sign after this year's slump. Well, usually this year's slump turns into next year's slump, which that slump actually is worse than this year's slump. Consecutive years of decline in the U.S. stock benchmark are rare. Well, yeah, as rare as Y2K and the Roaring 20s, which was rare. But what wasn't rare was what happened after that. When they do occur, here we go. Let me zoom in on this. The second year hasn't been worse than the first. What? Which actually doesn't sound so bad if it isn't. But if you just screw up one word, like the second year has been worse. Okay, than the first. Then you know we have problems. Also, my apologies for the weird screen effects. I'm currently now filming mobile because the screen that I was filming on was very gray. I don't know if you just caught that. But yeah, on with the story. This is coming in from Bloomberg. S&P 500 facing a historical warning sign after this year's slump. Consecutive years of declines in the U.S. stock benchmark are rare. Yes, well, rare until they are not, right? Once you go through, like what we just went through the last couple of years, that was rare, but you just went through it. Wait till you see what's about to come. When they do occur, it says the second year has been worse than the first. So get ready for more worser, which I will show you in the charts. This is one of the blogs that I follow. Charles, is it time to get out of the stock market? Well, it depends on the time frame of reference. Of course, the market excels at throwing bulls and bears alike off the bus with counter rallies and cliff dives. So the short-term answer may be different from the weekly answer or the monthly answer, which I will show you in the charts. I mean, are we looking at something like this? The double down negative returns from 1929 to 1932, 1939 to 1941, 1973 to 1974, 2000 and 2002. More than 2 back-to-back years in the red are even rare. Well, until they're not. And what I've done here, this is the S&P 500. Let me turn my face off because you don't need to see me. I turned on the Heikin Ashi so you guys can kind of see the trend, right? And if you zoom in on that blue line right here, that blue line, that would be the bear market right down there. And that is where my price target is calling in this chart. But if I move back so you guys can see a bigger picture of what it looked like back in the day. Now I know you see these two green bars and you're like, oh, this must be it. Bravo, all-time high. Here we go. And I say, here you go. No, do you guys see this? See that? Right? That's also called recency bias, which you guys are currently facing that recency bias. Like stock market can only go up. And if you go back and you look at the Great Depression, you look at the year 2000, 2007, 2008, these things are just, they're repeating themselves. And coming in from Fortune, if you got it, world's top, I'll turn my face off here for you, the world's top stock strategist says an earnings recession is coming it's coming for you. It's coming in the markets, and it could be similar to what happened during the 2008 financial crisis. Now, what you need to understand, I'll turn myself back on and kind of frame me here. What you need to understand, so when the Fed tightens, okay, it takes time. And right now you have not experienced, well, you're actually starting to experience it, but you have not yet been hit with the earnings from the tight conditions. So that is probably in the next, say, 4 months. At that point, because a lot of people trade earnings, they go, well, that's it. I am completely out. And it's kind of crazy. You know what? I just want you to take advantage of this down market. Remember, some of you missed the up market. You make money up. You also make money down. I mean, I could just open up Google. Look, there goes the housing market, like story after story. The CEO of one of America's biggest home builders said, we're already in a housing recession. So should you sell now? I mean, look at Disney stock. Disney stock on its way to worst year since 1974 as Avatar sequel disappoints. That's weird. I thought going to the movie theater was like a really big thing nowadays. No, it's absolutely, unequivocally not. I mean, I'd love to chart it for you. Actually, here. This is. I think I still have my Heikin Ashis on. Do I? Yeah, I still have it on. Can you see? See here. I'll go here. My bubble is going to be support for you. Do you see that green line here? Here, I'll move over. See that green line right next to my face? That green line is not so much support, right? And if I were to turn on one indicator, which is right here, see this area here, I'll put my face over that. See this zone right here? That zone. So for those of you that are like, wow, we could really buy Disney at a discount. That you're correct in saying you could buy Disney right now at a discount. But the truth is, looking at that chart, you got quite a bit more room to the downside, I would say there, Mickey. I'd say coming back to stories like this, Disney stock on its worst year since 1974, shouldn't surprise you. Like this, S&P facing a historical warning sign after this year's slump. Okay, because we're coming into earnings, not 2022, 2023. That is going to shake the market, and then 2024, and then some of you guys ask me, like, with I don't get it, Bravo. I walk around and I see signs up, help wanted, or something like, how about, I'm sorry, now hiring. Let me just here. Let's just listen in.
With little to no income, but instead they're helping high income earners. For example, you can make over $500,000 in many parts of the country and still get these Obamacare subsidies.
Yeah, and what was really staggering to me was when I looked at the bottom of your chart. It shows that the median salary for a secondary school teacher is $87,661. And in some cases, in New Jersey, for example, if you're collecting all the benefits that we just...
No, let me pause it. Okay, teacher makes $80K. someone who works, who doesn't work in New Jersey.
Just talked about, you are making that six-figure equivalent, which would be $108,857, but you're not working. You're actually staying home.
So, hey, did we just maybe possibly solve the question to why are people taking these jobs? Just tell you, this is exactly what they said. So it was $108,000 with no one working. In Connecticut, families making up to $300,000 per year are eligible to receive Obamacare subsidies. The rich just keep getting richer and the poor keep picketing, right? Make billionaires pay. The lowest, this is crazy, the lowest earning Americans and the middle class got a pay cut in 2021. So for all of you guys out there working really hard, now you know why people don't work really hard. And what is going to happen in the end? You are going to, it's again, I told you, how to hack the system. Well, solution, start a business, okay? Trade equities, get to the 1%, because the middle class and everyone else is going to get wiped out. My apologies. That's just how the system works. That's how politicians get elected. And you could either complain and picket. I say create picket signs and sell them to the people that want to picket. But also, I just want to say my apologies for my video. I promise I tested it, and then I have to go film mobile, and it's crazy, and I do the best I can to give you a video every single day. Thank you guys for supporting me. I love you. Have a blessed day, and I will see you tomorrow.